Most people think investing is terrifying, too risky, too complicated, or that you need to be some Wall Street genius with piles of cash. What's actually scary to me is doing nothing. Just like keeping all of your money in cash while inflation quietly eats away at it. In this video, I'm going to break down why investing isn't scary, especially if you do it consistently over the long term. I'll cover the biggest misconceptions, the different ways you can invest, and how tax wrappers like ISAs make it even easier to build wealth. And if you're ready to start your investing journey, there's an easy way to dip your toes in. Sign up to Trading 212 using my link in the description, and you'll get a free share worth up to £100. Just for opening and funding your account with as little as £1. It's commission free, super easy to use, and honestly one of the simplest ways to get started. I even received a free partial share of Nvidia, which is pretty crazy considering how massive the company has become. So if you've been putting off investing, that free share is a no-brainer. Click the link down below. Okay, let's be real for a second. Why do so many people think investing is scary? I've heard a lot of people say investing is just like gambling, and I believe that's not true. Gambling is all or nothing. You place a bet and you either win or lose instantly. Investing, when done properly, is about buying into a real business and the economics that grow over time. Another common misconception is that you need to be rich to invest. You can start with as little as £1. Even just £25 a month over decades can turn into tens of thousands of pounds thanks to compounding. But what happens if the market crashes? Do you lose everything? History shows markets always recover. Yes, they can dip, sometimes even for years, but diversified investors who stick with it usually come out ahead. The only people who truly lose everything are the ones who panic sell as soon as they see a dip in the market. And finally, people just think it's too complicated. You don't need to spend hours a day researching stocks. With index funds and ETFs, you can own a slice of hundreds of companies worldwide with just a click. So those fears are understandable, but they just don't hold up when you look at the bigger picture. Here is the truth. Investing is only scary if you treat it like a short-term game. You'd really only be investing money that you won't have to touch for the next 5 years at the minimum, but ideally until you retire. When you invest consistently over the long term, you unlock the magic of compounding. That's when your money earns returns, and those returns earn more returns, like a snowball. It's not about timing the market, it's about the time in the market. If you invest regularly and just leave it, history shows your wealth grows. Compare that to keeping money in savings where inflation slowly erodes its value. Over decades, investing comes out on top almost every time. So how is it you can invest? You can buy individual stocks in specific companies like Apple or Tesla, potentially getting big rewards but also bigger risks if the company struggles. You could even pick index funds and ETFs, which is what I go for. These are baskets of hundreds or even thousands of companies. They give you instant diversification and tend to be low risk, perfect for long time set and forget investing. So what about dividend stocks? These pay you regular income from company profits. You can reinvest those dividends, and over time the compounding is powerful. Also, if you're going to dividend invest, make sure you don't just pick the companies by the percentage of dividends. Make sure you're picking a strong company that isn't likely to fail. Finally, bonds. Yes, they're less exciting but useful. They're more stable and can be used to balance out the ups and downs of the stocks. Usually people use bonds as a lower percentage of their investments and then increase their holdings as they get older to make sure it is more stable. Now here's where investing in the UK gets even better with tax wrappers. The most well-known ISA is the stock and shares ISA. Anything you make inside it, capital gains, dividends, interest, is completely tax-free. Every tax year you can put up to £20,000 into it, unlike its American counterpart, which you can only put $6,000 a year. So we've got a massive difference. Alongside that, there are many different types of ISAs. You can do cash ISAs where they're not stocks at all. You get a guaranteed return, usually at a lower rate. There are also lifetime ISAs. Every pound you put in, you get 25 pence put on top for free. Although you're only able to withdraw the money for doing a purchase like a house for a first-time buyer. And if you withdraw the money early, you get a penalty of 25%. So it's basically the 25p that's put on top for free. Then there's the SIP, which is like a personal pension. You get tax relief on your contributions, but you pay the tax on it later when you start withdrawing from it. These wrappers make investing even less scary because they protect more of your hard-earned returns from the taxman. So what about crashes, recessions, or even bad headlines? This is where consistency usually beats fear. If you invest, like me, a set amount every month, what's known as dollar cost averaging, you simply ignore what the stock or fund is priced at, and over time invest consistently, meaning on average you would have created a much more consistent price over time, never paying too much or just too little. If you take the 2008 financial crisis, investors who kept contributing throughout the downturn ended up with huge gains in the decades that followed. The real risk is never in the temporary dip of the market. The risk is doing nothing and watching inflation eat away at your savings year after year. So here's the bottom line. Investing isn't scary. Not if you take the long-term view, stay consistent, and use the tools that are available to you. Start small, invest regularly, and let time do the heavy lifting. Don't forget, if you want a free share worth up to £100, check out Trading 212 with the link in the description. It's an easy way to get started. If you sign up, let me know in the comments what free share you get. I'd love to hear. And if you found this video helpful, make sure to give it a like and hit subscribe.